Bismillahirrahmanirrahim. What is up, guys? My name is Hassan and welcome back to another stock analysis video. This is a brand new high growth company I've been watching for some time. I'm looking to buy into this company as soon as I see an opportunity. This is a solid company, which you guys can see right here, is known as Crowdstrike Holding. Ticker symbol CRWD. So I'm in their investor relations webpage. So currently the stock is at $219, ticker symbol CRWD. It is listed on the Nasdaq Stock Exchange. One of the reasons why I like this company so much is because I see this company Crowdstrike doubling in the next 2 years. As always, before we begin, I have to give you guys a quick disclaimer. And this is very important to understand because I'm not a financial advisor, nor do I know you personally or your financial situations. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. Nor am I an Islamic scholar here certifying if certain companies are halal or haram to invest. It is just a place for you to start your own due diligence. Just to remind you, this is my 12th year investing. I do have very well-rounded knowledge, but still you have to make sure you do your own research. Another disclaimer that I want to point out before we get started is that all the information that I present to you guys are not mine. I get them from other people, research, videos, books, articles, 10K, 10Q, annual reports, their investor presentation. The only thing that might be mine is my emotions and my experience in the stock market. As always, don't forget to like and subscribe, and make sure you're doing your own due diligence, and make sure you hold yourself accountable for every investment decision you guys make. So before we get started, I want to quickly take you guys to my Robinhood portfolio. It is around $2,500. Quickly, I'm going to show you guys for one day, I'm down around 2%. And then for 1 week, I'm down about 0.8%. And then if we look at it for the 1 month, I'm up around 1.7%. If we look at it for 3 months, I'm up around 7% or almost $2,000. And then if we look at it for the 1 year, I'm up around almost 22.6%, I am up around $5,200. This chart right here, it's not fully accurate because they do not include the dividends. Yes, it is showing you my growth, but it does not show you my dividends that I have been receiving month after month. And on the right, you guys can see here some of my holdings such as AMD, KL, Texas Instrument, Calaris, Nvidia, Johnson & Johnson. So if you guys actually check out here, you guys can see rest of my holdings, the companies I'm invested in, and the reasons behind it. This is my 12th year investing in the stock market, and I've been doing, at least in a humble way, 15% year after year. So check out some of my videos, other videos, to see my all-time gains and losses. Without further ado, I'm going to take you guys to the stock analysis portion of this video. I'm going to take you guys to Seeking Alpha, one of the greatest websites out there that is free. You guys can do a lot of analysis, which I'm going to show you guys step by step. So Crowdstrike Holding pretty much provides cloud-delivered solution for the next generation endpoint protection in the United States, Australia, Germany, India, Romania, and the United Kingdom. It offers 11 cloud modules, its Falcon platform, through its software service subscription-based model. And this is a very important model because it's subscription-based, meaning that this company generates revenue year after year. So it's not going to be a one-time massive sale, but it's small increments of sales to come many years from now. And this is a very superior model than the one-time sales of the software. The main purpose of this company is to stop breaches, hackers from stealing your information, and so on. We see this all the time, that we get an email address or we get an email. They want us to download the software, download the video, and then we get our materials stolen, or we get a virus or malware that steals our information and our intellectual properties. Another way that happens is that they'll send us a email, they'll tell us to log in again, and then they'll steal our credentials that way. So this company pretty much stops us from hackers and from having data breaches. We hear about data breaches all the time. For example, I'm going to show you guys, just to go a little bit more in depth into this company, I'm going to show you how common these data breaches are. I'm going to take you guys to the top 10 data breaches of 2020. So number 10 on this list is Microsoft, which had 250 million records stolen. And then we have number 9, Wattpad, 260 million records stolen or compromised. So that data was initially sold to private sales over $100,000 and then published on the public hacking, where it was broadly shared for free. So these data breaches are very serious issues. On our list is Broad Voice, 350 million records stolen. And then we go to 7, Estee Lauder. We have 440 million records stolen. Just to quickly go over the list, just to show you guys, we got number 6, 538 million. And then we're going to keep scrolling down. And then we're just going to show you number 1 on the list. Number 2 is Advanced Information Service, which was 8.3 billion records, which was compromised. Number 1 on the list is Cam4. About 10.8 billion records were stolen. That's including first name, last name, email address, country of origin, sign up dates, gender, device information, payments, logs, credit cards, type, amount paid, applicable. So some serious hacking and information. So we're back here at Crowdstrike. So pretty much they stop breaches, they stop these hackers from stealing your information, and which is, this industry is getting bigger and bigger. One of the first things that I like to look at is their market cap. If I were to buy this whole company as a whole, how much would I have to pay? So currently their market cap is around 48.5 billion, or almost at 50 billion. As I stated earlier, I see this company doubling in market cap in the next 2 years. So pretty much we see them at around $200 a share. I see them at $400 a share in the next coming 2 years. Another thing I like about this company is their outstanding shares. Their outstanding shares is around 221 million shares, which is relatively low. Why do I think it's low? We're going to compare it to Salesforce, which is a lot more well-known, a lot bigger company, and we're going to see what is their current outstanding shares. So if we scroll down in Seeking Alpha, we see that their currently Salesforce outstanding share is around 915 million. So if we compare that to CrowdStrike, it is only at 221 million shares outstanding, which lower the share amount, the better it is. That means that for every share that we get a larger portion of our pie. As always, guys, if you made it this far, make sure you guys like and subscribe to the video. It helps me grow and helps reach out to more people. So in that way, we all make money together and grow our wealth so we can retire early and we can do big and better things with our. I do want to point out that this company, Crowdstrike, it is a high growth, high risk company. That means that's really important you do your due diligence. Even though I support it, I like it, that does not mean you go out and buy it. So sometimes we do need that high growth in our portfolio to get that 15, 20, 30% of yearly gains year after year. So you want to have a mixture. You want to have a solid foundation, and then you also want to have few growth companies. I would like to consider CrowdStrike as one of them. So I'm going to take you guys to their financial statements. Their financial statements under their income statement. If we take a look at their revenue, we can clearly see their revenues increasing year after year, and that's exactly what we want to see from a growth company. If we look at in 2017, they made around $52 million, and in 2018, they made $118 million. Fast forward to January of 2020, they made $481 million. This year, or for the last trailing 12 months, we can see that they made almost $800 million in revenue, or $761 million. Another thing I like to look at is, yes, their revenue is growing, but is their gross profits also increasing? If we take a look at their gross profit, not only is their revenues was increasing, but their gross profit is also increasing year after year, which is a very strong, healthy sign as an investor. So as a Muslim investor, we have to take a look at the interest. So we're going to scroll down and we can see that there is some interest expense, which is around $0.7 million in interest that they pay, or 700,000 here. And we're going to compare. Normally, we like to invest in companies that will have zero interest or little to none. So we're going to really pull out our calculator. They currently have a gross profit of 555 million. We're going to compare that with 0.07. So we're going to pull out their calculator. We can see it's 0.07 divided by 555.4. We get around 0.001. We're going to times this by 100. We can see that their interest expense is 0.1% of their gross profit, which is extremely low which we like. Some of the scholars say that it should be less than 5% of their gross profit. And this is actually 0% or 0.1% of their gross profit, which is, it should be 0.000. We're going to work with what we have. And then we're going to scroll down, and just to making sure about their long-term debt. If we look at their interest on long-term debt, we can see it's 0 for the last 4 years. So which is a very good sign. We want to see 0 debt, 0 interest to show that the company is very well run, very well funded without having to borrow any money. Now for the next part of the analysis, I want to take you guys to their balance sheet. We're going to scroll down. Again, we can see here their long-term debt is 0 for the last few years. Yes, they do have some short-term debt because of the interest that they're paying, but their long-term debt is 0. I don't even see their short-term debt. All right, next thing I want to look at is their total outstanding shares. Remember, we said earlier that their share count is low. So we can see here 2018 they're at around 44 million shares, 2019 47, and then 2020 they're at 212, and then 2021 they're at 221. So currently they're at 221. From the last 12 months, we can see that their share counts was not expanded, or they did not issue more shares, which is good, because as an investor, I do not like my shares getting diluted, which means I'm getting a lower piece of the pie every time they dilute. So we can see share count is still low, and they're not aggressively diluting their shareholders. Another thing, that this company is growing massively. One way I tell how quickly they're growing is by looking at their total employees. So we can see that in 2018 that their total employees is around 910, 2019 1400, 2020 2300, and then for the last 12 months they're at 3100. Based on this data, we can see that they're growing massively, they're expanding, and which is a very healthy sign. They're growing their revenue, they're growing their company. I see them continuing to expand, going to 3, 4, 5, 6,000 employees, maybe even 10,000 employees in the next few years. So now I want to go a little bit more in depth in the analysis. Currently, I like what I see, and we're going to go into their investors relation page, and then we're going to check out their presentation. We can see here corporate overview of Crowdstrike. We can see here their mission is simple: we stop breaches. That's all they do. They stop breaches, and that's what they're focused on. Here we can see they place themselves with the likes of Salesforce, ServiceNow, Workday, and Crowdstrike. They're saying that they are the 4 pillars of cloud platforms. And we know that these are some solid companies such as Salesforce and Workday and ServiceNow. They're saying we're good just as them, or even better. So we're going to take Crowdstrike at a glance here. So currently their annual reoccurring revenue is 907 million. The key word here is reoccurring, meaning that this revenue that they're getting is not a one-time revenue. They're going to be getting this revenue year after year for the next coming future. Not only they're going to have 907 million in annual revenue each year, but they're going to continue to grow their product to make even more money, more revenue, more profits. Another thing I like is that most of their revenue is coming from a 92% subscription revenue, which is excellent, because we want the money coming in each year. I don't want to buy or have a one-time product and I have to go out and get more customers. I like to have my same customers pay me each month. It's a lot more superior than having a one-time huge payment. They are currently at 8,416 subscription customers, which is great, and I see them growing this. Guys, if you made it this far, hit the like button, hit the subscribe, because we do these videos very often. We give out these stock analysis videos, so you have a lot more in-depth of where the company is heading in the next future. So another thing I want to point out is their growth rate is at 81% year after year, which is amazing. They're growing. This is, remember I said high growth, high opportunity. Remember, high growth also comes with a little bit of risk, but I see them as a very well-funded, well-run company without having issues. But remember, you do want to wait for a pullback. Another thing I want to point out is that 61%, yes, 92% is a subscription. Out of their 92, 61% of the customers have 4+ modules. This is a very important concept to understand, because think of Apple. What does Apple do? Apple forces you or makes you get their iPhone. After you get their iPhone, what do? You get their Apple AirPods. After you get their AirPods, you look for their MacBook. After that, you look at their iWatch and their other service. They pretty much hook you up into their network that you cannot leave. Is doing a phenomenal job in hooking their customers into buying more of their products, not just one. So 61% or more than half their customers are buying 4+ products, and that's how they get their money. They come in, they get you to buy one of their products to start off, and then they start selling you more of the products, generating more revenue, and that's how I see them going into profitability. So this is their rapidly expanding customer base. So currently 49 out of the 100 companies are subscribed to them. Another thing, they have top 11 out of the 20 banks. They have top 40 of the top global 100 companies. And their revenue is growing year after year on a subscription model from 17, 18, 19, and 20. They're increasing massively. I'm a big believer of Crowdstrike. I think that they will do really well the next 10 years to come. They're going to be one of the industry leaders. As always, guys, if you made it this far, hit the subscribe button, hit the like button. It will help my channel grow and help you guys get more wealth together. As always, thank you. See you guys next time. Bye, everyone.